Hi everyone, tax season is right around the corner. We are going to quickly give you a quick update on what are some of the changes and what are the deadlines for 2024 tax season. So I want everybody to understand tax year is 2023, tax season is 2024. The individual's returns will be due April 15th, 2024, same as corporation. Corporations will also be due on April 15th, 2024. Partnerships, any LLCs with multiple members, and S corporations will be due on March 15th, 2024. If you have any individuals who you paid for services over $600, you need to issue them a 1099 NEC, and that 1099 should be issued by January 31st, 2024. All right, so we are going to quickly discuss some of the changes. One of the main changes obviously is inflation adjustment. So we're not going to go through everything, but the standard deduction changes, for example, we will discuss. For single individuals, this year the standard deduction is $13,850. That basically means that the first $13,850 is non-taxable for individuals. For married filing joint, it's double, it's $27,700. And for head of household, it's $20,800. If you are filing married filing separate, your standard deduction will be $13,850 each. One of the biggest changes this year compared to that of previous year is that you're able to get a credit for purchasing a used electric vehicle. And the maximum credit available to you is $4,000, and the credit is 30% of the purchase price. Remember, the used vehicle MSRP cannot be more than $25,000. Now, if you purchased a new electric vehicle, the maximum credit you can get is $7,500. And we are now going to discuss credits that are available for children. The first one is child tax credit, which is $2,000 per child. In order to get this credit, the child needs to be younger than 17 years old. If you have a child that was born on December 31st of 2023, you will still get the full credit. Now, this credit has a refundable amount of $1,600. So what that basically means is, for one child, obviously your credit is $2,000, but if your income tax is zero, if you do not have any income tax, at that point, you will receive $1,600 per child. Let's talk about dependent care credit. So dependent care credit is basically child care expense or babysitting expense, if you want to call it. In order to get this credit, you have to make sure that both spouses are working. So both spouse needs to be working, or one spouse working and the other spouse going to school. All right, so the credit is 20% up to $3,000 of qualifying expense. In other words, the credit is $600 per child up to 2 children. So $1,200 is the maximum credit you can get for dependent care credit, unless your income falls below $15,000 in adjusted gross income. At that point, your credit will be 35% on $3,000 up to 2 children. So maximum credit you can get on dependent care credit is $2,100 for 2 children. So even if you have babysitting expense for 3 or 4 kids, it doesn't matter. Maximum is 2. Also, the children needs to be younger than 13 years old in order to get this credit. Let's quickly discuss earned income credit. So earned income credit is a credit available for individuals who falls under low income, right? So in order to get this credit, you have to make sure that you do have children, you fall within the threshold of income, and you have to make sure you are working. So if your income is too much, the credit is low. If you have no income, then you get 0 credit. This is how earned income credit works. So if you have no qualifying children, the maximum credit you can get is $600. If you have one child, $3,995. If you have 2 children, $6,604. If you have 3 children, and the maximum credit will be $7,430. So for example, if this individual has 3 kids and the individual is working, that $7,430 of credit will slowly decrease until that individual hits $56,838, which assuming that person is single or head of household. So in other words, if your income is 30,000, it's very possible you're going to get the maximum credit. As your income goes up, the credit goes down. That is the EIC credit. One thing you need to keep in mind is that in order to, if you do have investment income, in other words, interest income, dividend income, or gains from sale of securities or cryptocurrency, and the investment income was more than $11,000, you do not qualify for EIC credits. One of this tax strategy that you can use right now is that if you do see that you have a lot of realized capital gains already, and it's more than $11,000, and you also have some other securities, stocks that is right now sitting on your account at a loss, you have not sold it yet, you might want to consider selling it so that you could offset some of these gains with the losses. All right, so real quick, let's discuss what are the credits that are eligible for students being in college. So the first credit that I'll talk about is the American Opportunity Tax Credit. This credit is the better of the two. The second credit is the Lifetime Learning Credit. So the American Opportunity Tax Credit is a dollar for dollar credit, and the maximum credit you can get is $2,500 of qualifying expenses. The difference between the Lifetime Learning Credit and the American Opportunity Credit is that Lifetime Learning Credit is 20% up to $10,000, which is basically $2,000 in maximum credit. But Lifetime Learning Credit is a non-refundable credit. So if you do not have any tax, you do not get any of this credit. As opposed to the American Opportunity Credit, you will, if you do not have any tax, the maximum refundable credit on the American Opportunity Credit is $1,000. Now, American Opportunity Credit you could use 4 times. In other words, if somebody is attending undergrad and he attended the school, he or she attended college for 4 years, on the 5th year, that individual will not be eligible for the American Opportunity Credit, assuming you have already claimed the credit 4 times for that individual. At that point, you should be claiming the Lifetime Learning Credit. Keep in mind, if you received financial aid or scholarship and you did not have to pay any money out of pocket, you do not qualify for this credit. All right, this is a summary of some of the changes that I wanted to discuss. In 2023, there are not too many changes compared to that of 2022. Most of the items are pretty same, except for the credits that I mentioned about electric vehicle. Now, make sure when you are filing your taxes, you have collected all of your information. Do not rush and file tax return without having all of your documents together. So one of the common mistakes that happens is that some individual may have multiple W-2s and they forget one W-2. If you have a W-2 or a 1099, keep in mind that the IRS also gets a copy of that W-2 or a 1099. So when you file your tax return income that is reported gets matched with what the IRS has on their file. So you want to make sure that you reported all the income. Another common mistake that happens is when we have investment account where we invested on stocks and different various securities, and we thought that we sold stocks at a loss, I do not have to report any income. That is incorrect, because sometimes the IRS only receives the amount that you sold for. So in other words, if you have a stock that you sold for $3,000 and you actually bought it for $5,000, that means you have a net loss of $2,000. Some individuals think that they don't need to file a tax return on that income.